From Washington, this is the HPS Macrocast with Hamilton Place Strategies and Markets Policy Partners.
Good morning. It's Jobs Day, Friday, February 7th, and you're listening to the HPS Macrocast. I'm Matt McDonald in for Tony Fratta this week, and I'm here with John Fagan and Brennan Walsh from Markets Policy Partners. How you guys doing today?
Doing well. This is always a fun day of the month. Jobs Friday. We had a big one.
This is a particularly fun Jobs Friday.
Yeah, a lot going on here. What did you guys make of it?
Well, let's run through the numbers. So the jobs report was up 225,000, which is a really nice number. Coming into the week with the ADP number was 291,000, so everyone was kind of eyeballing this as an upside surprise, and it definitely delivered. The unemployment rate nudged up a bit, 3.5 to 3.6, but not a huge deal. And then labor force participation rate was up 0.2 to 63.4, which is really good. Wages over the past 12 months up 3.1%. All good stuff. It's worth noting in this jobs report that this is with the January one, they do the full year revision stuff, which credit to BLS. There's a lot of transparency in the report itself of what it would be with the revisions and what it would be without the revisions and all this sort of stuff. But you kind of have to look at the January numbers a little bit closely to when you're diving into the weeds on this stuff.
On the month-over-month change. Yeah, so that annual revision was about 514,000 jobs that we basically revised down from last year. So 2018 previously averaged about 223,000 jobs. Now it's 193.
2019?
2018.
Okay.
Yeah. 2019. Yeah. Okay. And then when we looked at February, that got revised down to 1,000 jobs, which doesn't really matter, but just it's kind of fun. Because it was still positive, we have 112 months of continuous positive monthly job gain. So we came close to losing it.
Got to maintain the streak.
Exactly. Yeah. But in terms of those revisions, have to give BLS a lot of credit because there is a lot of transparency, but a lot of the problems that they have come from because so many sectors in the United States and the world are changing, especially with technology. Mm-hmm. So they have a hard time in things like the trade where you have a lot of companies go out of business and then they're immediately replaced by something in the internet. So that's a lot of where you see those revisions.
You also, it's
not a conspiracy thing.
Yeah. There's also the dynamic on labor force participation rate.
Yep.
You have huge changes on the demographic side in terms of aging populations, retirees, and then even within that is that as we're more service dominated, is that retirement doesn't necessarily mean what it used to, and people work later. There's so many forces at work.
Because with that labor force participation, it's at 62, 63%. It's been going up, but when you demographically adjust it, now we're back above where we would have been in like the 2000 highs.
Yes. Yeah.
So I think overall, this was a very good jobs number. Some people are. It is true. So January was very warm. So construction created 44,000 jobs, where normally in January it creates 10 to 20. So if you want to subtract 20,000 jobs from this, fine. It's still 205, 200. It still points to a very, very strong economy.
There was some discussion of Boeing impact in any of this. Did you guys follow that at all?
Yeah, but that kind of washed out. That screwed up November and December. So November was probably too low because of it, and December was too high because of it. But going through this, I didn't really see any Boeing problems with it. Back then, you also had the United Autos workers problems. But overall, it was pretty strong. The one, I wouldn't call it troubling, but it's almost a conundrum where we have incredibly low unemployment rate. We're still creating, 150, 175,000 jobs, but we just aren't seeing the acceleration of wage growth. So when you look at both supervisors and production workers, mid-2019, we were climbing towards 4%. And for some reason, we kind of came back down. Last month, it was 2.9, but we bounced back up to 3.1. which is good, but the the 3-month trend, 6-month trend is kind of down. That's not what you would expect with those numbers, but maybe it's just pointing to that, we're not at complete employment, that there's still a lot of people to be hired. Well, and we saw that in the unemployment rate. The reason that the unemployment rate ticked up a tenth was because new people entered the workforce. So the denominator increased and they're unemployed, thus it went up.
Yeah. It's an interesting, the entirety of that is interesting in the context of the Fed too, and how they interpret this stuff and where they're at and Phillips curve and whether it's broken and all that sort of stuff.
So when John and I walked in, we immediately looked at it. So kind of a great number. It beat expectations. You can find some small little things if you want to quibble about it, but overall it shows the economy's in a very good place. And John, what happened to the 10-year?
Yeah, I was watching the 10-year yield, and when the headline number came out, it looked like a really strong number, a big upside surprise. Obviously, traders were, they were basically assuming that it could be because of some very strong job numbers earlier in the week and we'll get back to that in just a minute. But the 10-year Treasury yield popped up in a vanishingly little move higher, and you would expect with a big number, all else being equal, Treasury yields go up, the dollar goes up, the S&P 500 futures will go up. That's the way it would normally play out to script.
Right.
And it just didn't happen at all. It went completely the opposite direction. 10-year yields had been rallying into the number, which is rare. Usually they're very flat and directionless going into a big number like non-farm payrolls, but they'd already gotten a little bit of a bid going, and 10-year yields were lower, and they accelerated to the downside after the number. So I assumed there was something underneath that headline number that looked bad, but there wasn't a single thing that looked bad. Brendan mentioned some nuances, but
those weren't enough to, because also when we talk about those 500,000 benchmark revision, we expected 500,000 to be done. That wasn't a surprise to us. Happens every year. I mean, I think probably the biggest explanation, I think there's two. There's one immediate, that basically we're on a Friday, we're getting bad headlines about the coronavirus. So it's time to end. The stock market's at highs. It's time to kind of take off some risk and be a little more cautious. But secondly, I saw a study yesterday. So in 2004, so pre-crisis, pre-expansion of the balance sheet, on Jobs Friday, no matter what it was, the average move in the 5-year Treasury note was 17 basis points. Now, 2 years ago was when they did the study, it's basically 2 basis points. So just the volatility in the Treasury market and really all markets has kind of been muted.
Yeah, and this week, obviously, as I alluded to before, the ADP number, which is that privately compiled jobs number, which came out on Wednesday and is a very, it's not really usually a good bellwether, but it's taken as at least indicative, and it was a huge blowout to the upside. So maybe the ADP stole a little bit of the non-farm payrolls thunder. But we've also just, taking a further step back, we've just seen, the Fed downplaying the connection between strong jobs and wages and inflation. Markets are maybe a little bit spoiled. We've just, every single month we seem to get a really robust jobs number. And it doesn't seem to have that same indication of, growth accelerating. But not that growth is bad, but it's a little bit more disconnected. It's more disconnected than it used to be from inflation, from growth expectations, and from what the Fed's policy outlook will be. And so that's one of the reasons it doesn't move markets the way it has in the past.
I feel like the Fed on employment and wages and inflation is back to a wait to see the whites of the eyes approach. And it's funny because I feel like that's where we were in Yellen.
Yeah, we've returned to that.
And then, we had the mid-cycle correction under Powell, and now I feel like we're back to...
Yeah, you're 100% right.
We'll wait till...
So if you're a risk taker, it's kind of the perfect scenario. You have a Fed that told you, we want to stay on hold for as long as possible. You have an economy that's creating jobs, which is very supportive of earnings, but you're not seeing wage growth and you're not seeing inflation. So the Fed has no reason to worry about raising rates. Inflation's really the only reason that they could possibly do it, and it's just not showing up.
And just to talk a last thing about rates, obviously the 10-year yield is the 10-year notes rallying really hard today. We've got the 6 basis points downside on the yield. We're at 1.58%. That is really low. Just by way of context, we started the year at 1.9%. At this time last year, we were at 2.7%.
Yeah, it's amazing.
And at the height of the trade war, when everything really looked like the U.S. and China were going to drop the gloves and really start slapping tariffs on each other in August, the 10-year yield dropped below 1.5% just briefly.
And that was the low,
Yeah, and so we're only a few basis points over that. And yield curves are flattening again. We talked about that sort of signal that comes through. We've seen clearly risk aversion associated with the virus outbreak, and we saw the rally get going earlier in the year, which is almost forgotten with the geostrategic risks and that sort of thing. But the Treasury market is really got some momentum in a direction that gives us some sobering things to think about with the economic outlook.
So it's interesting. So this is the January jobs report, first kind of jobs report for 2020. It is I feel like it's the scene setter for the economic year ahead.
Yep.
We had a bunch of scene setters this past week, including the conclusion of the impeachment trial of the president, the State of the Union, the Iowa caucus results. So let's take a break.
Before we do, I'll set the scene. The one nugget I found from this jobs report that can be politicized is Trump's first 37 months in office, jobs were average 182,000 a month. And for Obama, his last 37 were about 210.
Yeah.
So that's silly because as we get deeper into economic expansion, it's supposed to go down. But I wouldn't shock that this comes out pretty soon. Yeah.
All right, so let's take a break and then we'll pause and come back to the rest of this action-packed week in Washington.
On the first Friday of every month, HPS analyzes the latest jobs and labor market data in a digestible format. Sign up for our reports at hamiltonplacestrategies.com or on Twitter at HPS Insight.
All right, we're back. So I guess we're taking the week in reverse a little bit. There's so much to talk about, but let's go backwards. We've got State of the Union, or well, I guess technically the last thing that happened before Jobs Day was the vote on impeachment.
Yeah.
So that's done. It had all the anticlimactic aspects of a known quantity and what was going to happen.
Yeah.
And
it was always really funny when I talk to somebody that wasn't based in D.C. or they come down, they'd be like, "Oh, so what do you think about the impeachments? What's everyone saying?" And I would always kind of reply like, "Oh, that's still going on," and like it never really comes up anymore.
Yeah, there's a theory in I don't know, political science circles that impeachment is fundamentally a political act.
Yeah,
and I kind of subscribe to that in the sense of like, yes, there's a trial, but it's the Senate that's the jury, and then you have the question of the crimes and what is the crime, what is removable, and high crimes and misdemeanors, and like it's all very subject to interpretation in this exercise. And fundamentally, it is kind of the political resolution and political balance of power that it introduces and that sort of thing. On some level, I guess having everyone feel like the outcome beforehand made it feel somehow more political in that it was really the scene setter for the campaign to come, is that the House Democrats made the case for why the president should be removed and fitness for office and all these sort of things, and that's kind of the opening salvo of the 2020 race. So in some senses, it was both the end of the impeachment process of these months, but it was also really the beginning of 2020.
Yeah, you're totally right. And then the speech that he gave yesterday was basically his kick off the election season speech.
Yeah, so and then that's right.
Also the State of the Union.
That's
too.
right.
Yeah.
So he had, even after the impeachment vote, we had him with his, I guess, impeachment celebration rally in the East Room, holding up the newspaper, settling scores and all that stuff, and then State of the Union, which was the day before the impeachment vote, was very much. I mean, every State of the Union in an election year is very much setting the stage for, okay, here's what I'm going to run on.
But how would you compare this one to previous ones?
Well, it was interesting for a couple of reasons. Is that it had aspects of it that were more rawly and openly partisan than a lot of State of the Unions. The people were talking about the 4 more year chant being unusual for a State of the Union. I'm not sure that hasn't happened before, but
I wouldn't be shocked.
But that's notable. I would say. I mean, my overall impression watching it was just that the surprise reappearance of the military dad and and the surprise awarding of the Medal of Freedom, and it had a lot of showmanship kind of. Every time you do the State of the Union, there's always the guests that serve the point in the First Lady's box, but this one was particularly a little next level in terms of the showmanship factor. It was as produced as State of the Union's guests get, I guess. But connecting it back to the economy and jobs day. I mean, this is the jobs report that he was looking for, and
exactly.
And then with impeachment in the rearview mirror, I mean, following the polls, he seems to have gotten a little bump over this past
That was very,
week.
very interesting.
This is going to be a close election. But coming out of this week, you'd have to say that, I don't know, I think most prognosticators are saying he's, it's 50% plus one that.
Yeah. And I think that narrative's interesting, where because Trump kind of came out of nowhere and we thought Hillary's going to win, and because of the way that the night unfolded, we knew pretty early that Donald was going to be the president. And I think in the last 3 years, the popular narrative is that he won in a landslide. And I don't think people realize just how tight the vote actually was.
Super tight.
Yeah.
Yeah.
So everyone's like, oh, he's definitely going to win. He very much could, but I would say it's 50-50.
Is that the market? I feel like on the market side, they are way over indexing to a Trump reelection.
Yeah, it's like the economy's strong, the market's at their high.
Yeah,
he's going to win.
That's the shorthand on Wall Street, certainly.
Yeah.
It's the economy stupid mantra is still very much the way people on Wall Street organize their political thinking.
Sure,
and that's and that delivers delivers re-election, that formulation. But the reality is, it is a very different time and place in the U.S. when it's the economy stupid was very
the funny thing,
different format.
The funny thing in D.C. is that you talk to any pollster and they will tell you that that people's views of the economy now change depending on the party in power. So if their chosen party is in power, they have a better view of the economy than if the other party is in power, which is a little backwards to the formulation and the logic that you're describing that the market looks at this through. I mean, I think it's still true that on the margins, a better economy helps an incumbent and a bad economy hurts an incumbent, but that's not quite the whole story anymore.
Yeah, I think that's right. But certainly it's hard to look at political developments this week and say that they're anything but positive for the president.
Yes.
And so when market participants are looking at it, the one stock that really seems to be the bellwether for Trump's reelection is United Health, that managed care giant.
Yeah.
And that's up, it's up 7.3% this week, outperforming the broader S&P 500 index. And so there's a case, and certainly there are a lot of commentators that said, hey, the big rally in the S&P 500, until today was up over 3% on the week, pretty big jump in 4 days. That maybe politics and the president's great week is part of that. The fact that United Healthcare, I think you can make that. I'm more sympathetic to that claim that has something to do with the broader index. I mean, why would Europe be rallying? Why would Asian stocks be rallying? I mean, basically, European stocks outperformed the S&P 500 this week, and not because President Trump his chances improved. So I think that you can pick certain aspects of the market that give you a little bit of a tell, but broader markets I think are much tougher to make that case.
Yeah,
and then when
it's
you look
early.
It is early, and it's
early.
way over the horizon for market participants who really think. I mean, 3 months is for a lot of market participants.
Yeah, and whatever kind of clarity we have on some aspects of Trump's campaign, he's going to have. It looks like he is going to have a strong economy through the election. He is done with impeachment. He kind of laid out his case in State of the Union. On the flip side of whoever his opponent may be,
I thought
we have nothing.
I thought
but
Iowa
confusion.
clarified it.
Yeah, so we have Iowa. So all right, so as we sit here on Friday, I guess there's.
Do we actually know yet?
Well, it's a good question. I was I'm looking at 99% reporting, and it looks like Pete Buttigieg is just ahead by a hair against Bernie Sanders in what is this delegate equivalent count. They actually are. It looks like they both have the same number of delegates. So I guess depending on the number that you, because I think Bernie had a little bit more of the raw vote, but it looks like the final tally will be Pete Buttigieg, Bernie Sanders, then Elizabeth Warren, then Joe Biden pulling up in fourth, just ahead of Amy Klobuchar, who is in fifth, and then the rest of them kind of, I don't know, finished out of the money, have no delegates.
So that big story must be Biden, right?
Yeah, I mean, so the story coming out of this, I think, well, one is that you can't overestimate the amount of attention that winning Iowa provides in terms of momentum going into the following contests, except this year where there was no clarity. So it's not even for Buttigieg and Sanders, it's not clear what, if any, benefit they will get from this coming into New Hampshire. Now, Bernie neighbor is from Vermont, neighboring New Hampshire, and Warren neighbors on the Massachusetts side. So there was kind of a perception of a little bit of a home game. I mean, especially for Warren, where the Boston media market is such a chunk of the New Hampshire population down there. Buttigieg was really banking on making a statement in Iowa, which he did. It just took too long to make the statement, so that's unclear. And then Biden in 4 is bad. I mean, that's not good.
Yeah, and he's running out of money too, right?
Yeah, I think there's always been he's not known as a great fundraiser. I think like it's funny. I think originally when Biden got in, political prognosticators had a little bit of we've seen this show twice before, and it didn't really end well. And great guy, but does he have what it takes to go the distance? And he proved resilient over time, but it seems to have all fizzled at exactly the wrong moment.
Exactly. And then there's another guy that's not running out of money.
That's right.
He didn't run in Iowa either.
No. And that piece of the puzzle, the Bloomberg question, is huge and is a little. I mean, Bloomberg and Trump could not be more different in many ways.
Right.
But the unpredictability that they both introduced to the political process is profound in ways that I don't think people appreciate.
Exactly. This isn't Perot, because Bloomberg ran New York City, and he's incredibly popular. He is a politician, along with being one of the wealthiest people in the world. And then the part of it that I love, too, is that him and Trump know each other, and they hate each other. So you just throw that part of it.
Yeah, this isn't going to be personal at all.
Yeah, I know. No, I mean, immediately, because Trump has been calling him short, and then just immediately he just spends more money, attacking him.
Yeah.
This is February. This is going to be amazing.
So the Bloomberg theory of the case has been that, hey, there's not going to be a strong centrist Democrat coming out of the first couple of states, and we can't put up someone who's just going to fail against Trump. That was his theory, and he had the money and resources to put in to make it happen. Over the years we've looked at the kind of resource and staffing question of presidential campaigns, and like my recollection of say the end of like go back to like Trump's campaign, as we said, is a little different.
Yeah.
But if you go back to kind of Obama, Hillary, Romney, those campaigns by like general election, they're generally ramping up into paid staff of like 2,500 people or so. And Bloomberg just announced that he is hiring 2,000 people
right now.
That people don't. There's just it's. Yeah.
But for context, so what did it cost Hillary to run last year? A couple $100 million.
Yeah, I think that for kind of Hillary, Obama, Romney, more I don't know what you'd call it, normal presidential campaigns. They were closing in on kind of $1 billion. Yep. Total cost. Obama and Romney would have been less than that, but I think Hillary was closing in on that.
So that's an important. And then to put it into perspective, so we don't know exactly what Mike Bloomberg's worth, and whatever, if it's 50, he's worth. If people think he's worth 50, he's worth 75.
Yeah.
So for him to spend $2 billion at 73 years old is like you and I kind of splurging on a big steak dinner.
And as different as he is from President Trump, obviously, from the perspective of Wall Street, they're not that far apart.
Yeah.
If you're thinking about the impact on markets, you are, and you're a Wall Street person, you're just as happy with President Bloomberg, or even more so in some ways than you would be with the second term of President Trump. Now, this is obviously going to be parsed in much more granular detail as we get closer and we actually find out who is the candidate. But when you
if he became the nominee, that's win-win.
Right, yeah. I mean, but even Buttigieg. I mean, when you think of, we were joking with an old friend of ours. If you think Wall Street thinks very simplistically about elections, if picture it kind of like a slot machine. It's like president, Senate, House.
Right.
And basically all the different formulations of those, so few of those formulations, even with Warren and Sanders in the race, so few of those formulations actually spit out like a big change in the in the U.S. policy, economic, and markets environment.
Yeah. If especially it's like, tax.
Sanders, Democratic, Democratic Senate and Democratic House, that's one that comes out with a very big sea change.
I mean, talk about a contrast in the Democratic primary, though. I mean, setting aside Buttigieg, we'll see if he can deliver in New Hampshire the way he's done in Iowa. Like a lot of the talk coming into Iowa was Sanders. Buttigieg, if anyone, I would say probably was hurt the most by the Iowa debacle because he would have had great headlines, and Sanders
didn't get any headlines,
and he didn't. And
almost
Sanders
negatively because he said he won before it was clear, so it was kind of like he was being arrogant.
But with big questions around Biden, and we'll see how Bernie does in New Hampshire, you couldn't have. I mean, the contrast between Sanders and Mike Bloomberg could not be more stark. Yeah. It's amazing.
I know.
The interesting thing too about Bloomberg and the money and that sort of stuff is that at least at the state level, there are lots of examples of very rich people running for political office who cannot go the distance.
Yep.
They can buy a lot of ads.
Well, we have some in this so far.
Yeah, sure. And it's true at the presidential level too, but it is different when you have candidates with money or fundraising resources like Romney back in the day or Bloomberg now, who have actually won office before, successfully governed, and
are a name and a face that most of America know already.
Yeah.
It's not just the CEO of some company. I don't know who.
I've seen a lot of business leaders who say, "Oh, I can do politics." It's all way harder than it looks.
I totally agree.
And they, but Bloomberg he's walked the walk. He's done it before.
Yeah, and especially as a rich guy, you're a big guy in your town, essentially.
Yeah.
But once you step out of that, very few people know, who rich people are, unless you're also a celebrity,
Right.
Yeah. So Bloomberg checks a lot of those boxes.
Yeah.
And so he's basically ignoring the small states and focusing on the big ones.
Super Tuesday.
Yeah.
Yeah.
And when is that?
It's, I guess, beginning of March.
Beginning of March, yeah. So we got about a month.
Yeah. And so between now and then, we'll have New Hampshire, South Carolina, Nevada are the other upcoming races. So, New New Hampshire will be super interesting if Biden has another low finish.
Yep. Is he done?
I mean, it's interesting. I mean, it certainly puts all the chips in on South Carolina for him.
Yeah.
And I don't, it's such a, I guess back to the beginning of this conversation, it's such a scrambled field at this point. Nobody's ever done what Bloomberg's doing in terms of having a Super Tuesday firewall. You have Buttigieg, who's the leader coming out of Iowa, but has had 0% black support,
yep.
which is crazy, and that's I don't know how you thread that needle in the Democratic primary.
Not easy.
And then you have the one of the other top finishers isn't even a member of the party. He's describes himself as a Democratic socialist. So it's, I mean, for all the clarity that has been provided in the Trump universe this week, the Democratic universe has just blown up in terms of what's going to happen and what it looks like. So
yeah, that's when people ask me, "What do you think is going to happen?" I was like, "I have no idea. I don't even know who the candidate is."
Yeah,
it could be Michelle Obama for all I know.
Yeah, it's going to be a wacky ride. Well, that's our short summary of the week that was. What do we have coming for next week in what will almost definitionally be less eventful than what we saw this past week?
And actually it is less eventful. We get some fourth quarter GDP out of the UK and the Eurozone. In the United States, also we get Chinese foreign direct investment, which is interesting because China has a lot of loan problems. So that's something that the markets pay close attention to. In the U.S., the big ones are we get our CPI, so the inflation number for January, and then really the big one is retail sales for January.
We're basically going to be seeing the last few data points here in January that are not going to be subject to a big virus-related distortion. Obviously, the U.S. is going to be less so, but the data coming out of Asia already for January is starting to show some of the effects, and that is going to be over the next 3 months. It's going to be very hard to find a signal amid the noise.
Yeah.
And so to some extent, even if there's a bad number, investors will throw it out in the trash and say this is just a virus-related fleeting impact, just like SARS. It's going to wash out in a quarter or something like that. But that remains to be seen. We haven't talked a lot about the virus, and we'll put it aside for the moment. But it's definitely Friday. The last 2 weeks, and again this week, we're seeing the nerves about the virus really come to the fore in markets on Friday. Nobody is really all that confident about holding big, risk positions that they might feel better about on like a Tuesday or Wednesday over the weekend when they can't get out of their positions if there's bad news.
All right, so that is it for this week. Thank you, everybody, for tuning into the HPS Macrocast. I'm Matt McDonald with Hamilton Place Strategies. Thanks to John Fagan and Brendan Walsh of Markets Policy Partners. Have a great weekend, everybody.
Thank you for listening to the HPS Macrocast. Please remember to subscribe, rate, and share. Find more from Hamilton Place Strategies at hamiltonplacestrategies.com and follow Tony Fratto on Twitter @TonyFratto. Learn more about John Fagan, Brendan Walsh, and the work they do at Markets Policy Partners by visiting marketspolicy.com.